So weekly levels do not look that great, right? Our only saving grace is this pocket right here. You'll notice that a lot of TA people are basically saying, well, we're at our last stand. Lose this level and it's lights out. Because if you look at it right here, this has been our prerogative of an uptrend where we've set our low, we've changed directions in terms of trend, right? We have that higher low, higher high. Now the problem is we're starting to wilt. So if we can't break above 28.6, we're in trouble. And if we lose 25.7, we're in massive shit. And right now it looks like the next 2 weeks or so won't be the greatest. If the weekly closes like this, you would anticipate a retest of this 26K area. You can call it a head and shoulders, but essentially what you're seeing is prices form resistance. Resistance is resisting, right? And then you can consider this kind of like a deviation. This could get very ugly. And I know that it doesn't look like much, but this is about 9%. So you would anticipate the rest of the market to do maybe -15, -20 roughly. Let's go into the lower time frames. Biggest concern here for me is this. So this was the high of this entire range, right? We felt good when we broke through this area, 27.7, especially because it came off the back of, oh, it's October 1st, there's seasonality. Most of the time, October tends to be a good month for crypto assets. So there's a bit of excitement right here, right? Well, now we've just turned this range high into resistance. This is a deviation that could be attributed to the excitement from the seasonality, if that makes sense. So that's kind of what I'm chalking it up to, right? Now, what was Saylor's average price? Oh, he bought 147 million at an average price of 27K. Price is a magnet towards areas of high liquidity, like a lot of interest, a lot of market participants that pile in at a certain area. So you would anticipate prices to at least come down, retest this 26.9, 27 area. If we lose 27, you're basically seeing the bottom of the range. And then that was our make it or break it level on the weekly. So you're looking at 27, and then you're looking for probably this 26 down to 25.5 area. This little pocket right here, right? Where if prices come down, you might get something like that. Make no mistake about it, I really do think prices are gonna come down and retest this area. It's very unlikely that prices just move up from here. No underside retest, no overside retest, nothing. I highly doubt it. Saylor does not deserve to get off that easy. I'm sorry. So be very careful here. I wouldn't buy this dip. And the reason I wouldn't buy this dip is if you go into the hourly, probably gonna see a small bounce leads to about 27.6. But I think that's mostly it. This is nasty, dude. This is nasty, and this is just that textbook bearish retest, right? So if you're looking at the point of breakdown is technically up here, right? This is the point of breakdown. It didn't even get that far. I can't tell you how important it is to look at momentum, right? To see who has the momentum is to see how long it takes for prices to move up, and then watch how quickly those prices revert. So when you're looking at this, you're looking at 2 days and 15 hours to move upwards. Gone in about 4 hours. That should kind of give you a hint as to what the low time frame momentum looks like. So the low time frame momentums don't look very good. Okay, so I would be very wary of hopping into any large longs right now. Can I break down my TRB trade? These are your lows. And then as you retested it multiple times, you're getting lower highs right here, which is a diminish in momentum. Now, as we retested it from the bottom right here, this made for a great short, because I know that a lot of people like to enter a trade late, right? Because they think, okay, TRB's pulling back, I'll long it and I'll make money. The key difference here is that funding has pretty much completely reset, and the structure on this versus this is totally different, right? Prices are not holding these lower highs. They're actually forming lower lows. So stark differences in price action right here. So yes, a lot of people are expecting another, like boom, right back to 64. And I'm not saying that it won't, or there's zero chances of that happening. It's just those small key details stack the odds in your favor that it's not going to do that. And then what you normally see is, because people have that idea that, okay, well, if I just keep buying support because it's been working for a long time, it's inevitably gonna bounce. So you have this slow and steady grind down, right? As people who are benefiting from this entire move up are starting to take profit or shorting or closing out their long positions, whatever, you're gonna see that it's just a gradual, very controlled selling. Like, it's nothing intense. It's nothing that's like, oh my god, it's going all the way down. There are some coins that do that, and I think those are just because they're significantly more manipulated. But I do think TRB has more natural market participants because it has a staking component, and a lot of people are staking it because at one point I think the staking was giving you like 1700% in a year. So you should just see a steady grind down, sharp impulse, steady grind, sharp impulse, probably until under 30. Would I add to TRB here? No. I would not add to TRB here. We would want prices to go sideways and then we continue the short. We don't want to short the expansion. This is where you build the position. This is where you reap the profits. This is where you build the position. This is where you reap the profits. Okay. Anyone doing otherwise is either breakout trading, breakdown trading, or wrecked. This is where you want to start adding. Not like right now, but I mean like if you see consolidation across here, like a small bounce, this is where you want to add. Right, like 43.5. Don't jump the gun. Don't just short because it's breaking down. You're already short. Now short when it gives you that slight reprieve, right? As people hop into the buys, fill those positions. Yeah, because I truly do think it's gonna come down at 37, but it might take, a couple days. All right, Solana, like resistance is still resisting. Levels are still being nuked. Things don't look the greatest. It's not that we don't anticipate prices to do well in the future. We do, but we shouldn't trade like that time is now. And a lot of people have that disconnect, and you're gonna see a lot of people lose a lot of their money before they even get the chance to make money, and that's the saddest part. GMT, please. This is just disinterest, and you guys have to remember that is Steppen technically a game? It's like an exercise, I guess, whatever. It's like one of those Web3 gaming walk to pay or whatever thing, right? Like whatever. But these kind of projects depend on a social network where if you're playing games, it's not fun to just always be paying by yourself. There's a community behind this whole walk and pay crap, and I just don't think the community is there. And I feel like this is what disinterest looks like, where there's this gradual just move down to zero. I don't like GMT as a buy on a technical level because yes, we could be very close to a bottom, but this might be months. This is a waste of your time, and time is an opportunity cost, right? So this is not the greatest coin to get into. Let's go into the lower time frames. You did see a large pump, 10% move up, immediate 10% down. You could argue that, okay, well, it took the lows. We might get a little soft bounce right here, but that's as far as I would give it. And if it loses this level, you would just get the fuck out. Maybe it comes down here, and if you're really desperate, you can buy. But ideally, if you're not already in a position, I see no reason to get into this position. LQTY. I'll use this to make an example of what makes a good trade. That's a pretty common question that I get. A good trade is not a trade that works or prints or wins or makes you money. Okay, it tends to be that good trades make you money, but that's not always the case, right? You can have a good trade and lose money. That is the most important thing for people to realize, okay? Secondly, good trades are trades that you can define your risk and have an exit strategy that is not compromised via liquidity, exchange, etc. And the last part is very important. I know a lot of you guys are like, what the fuck does that mean? Like an exit strategy that's not compromised. That means when you enter a trade, even if it's a good trade, you entered, you knew what you're gonna do, whatever, right? Your exit strategy is not compromised in a sense where, oh yeah, I'm gonna go get lunch, I'm not on a computer, and then you fuck that trade up, even though you defined your risk, right? Or, oh, like, wait a minute, I entered $1 million and that risk is okay with me. However, I can't exit because there's no liquidity or whatever, right? But that's what makes a good trade. It is the ability to define your risk and have an exit strategy that is not compromised, right? So the moment you're getting slipped 2% on top, unless you plan for it, and if you're planning to get slipped 2%, that's already not a good trade, unless you're literally Michael Saylor or something, right? And I'm talking about trades. I'm not talking about some DEX shit coin that, the moment you sell, you lose 5%, okay? For instance, like this long would not be considered a good trade. The reason for that is just off a technical level. You've seen that, okay, it's been rejected off this level multiple times. This is a retest of the highs right here. Your stop loss would have to be somewhere under here or under here, right? Like these are the only two levels that I can think of that would make a decent stop loss. So if you long right here, maybe you're targeting up here and your stop loss is like down here. I guess it works out, but I wouldn't call this a good trade. I'd call this a 50-50 and you're longing resistance. And notice that like, just because you're able to define your risk does not mean that the the trade can't go fucking upside down and you lose money. You can lose money and still take a great trade, bro. Like, that's what most people don't understand. Where if you take a good trade and you lose money, oh well, like, charges to the game, move on, you're good. But the moment you start to confuse a good trade with making money is when it all starts to spiral downwards. Because there are some people who make some atrocious fucking trades, and they will make money, and then they'll keep repeating it, and then one day that atrocious trade isn't saved by a Hail Mary luck of grace or some shit, right? And they just end up literally liquidating their entire portfolio. That's why this question is so important. It's so important because people don't realize, and that's what makes trading so difficult, because people think, hey man, if I'm making money, it's a good trade. Like, no, it fucking isn't. Keep that in mind when you're trading.